Welcome back to the channel, financial enthusiasts. Today, we're diving into the bubbly world of non-alcoholic beverages. Get ready for an in-depth analysis of four major players in this industry: Keurig Dr Pepper, Coca-Cola, PepsiCo, and Monster Beverage. These companies might quench your thirst, but how do they stack up when it comes to their financial metrics? Buckle up as we dissect their key numbers, compare their performance, and give you the insights you need to decide which of these giants might make a splash in your investment portfolio. Let's kick things off with the price-to-earnings ratio, a fundamental metric that gives us an idea of how much investors are willing to pay for a dollar of earnings. Among our contenders, Monster Beverage boasts the highest PE-TTM ratio at 29.27, suggesting that investors have high expectations for the company's future growth. Coca-Cola follows with a PE ratio of 25.97, PepsiCo at 21.83, and Keurig Dr Pepper at 19.68. Monster's high PE ratio indicates that the market is optimistic about its growth potential, despite its relatively smaller market cap compared to giants like Coca-Cola and PepsiCo. If we look at the 5-year average PE, Monster Beverage again leads with an average of 37.22, showing that it has consistently been priced at a premium. Coca-Cola, with a 5-year average PE of 24.59, and PepsiCo, with 24.83, have also enjoyed stable valuations, reflecting their established positions in the market. Keurig Dr Pepper's 5-year average PE of 21.77 suggests that it has been valued more conservatively over the years. However, when we turn to the forward PE ratio, which gives us an indication of how the market views the future earnings potential, we see a slight shift. Monster Beverage's forward PE drops to 24.51, still the highest among the four, but it indicates a more cautious outlook. Coca-Cola's forward PE is 23.88, PepsiCo's is 19.73, and Keurig Dr Pepper's is 17.67. This suggests that while all these companies are still seen as growth stories, the market is slightly more conservative about their future earnings growth, particularly for Monster. The price-to-earnings-to-growth ratio offers a more nuanced view by factoring in expected earnings growth. Here, Monster Beverage impresses again with a PEG of 2.25, indicating that its growth prospects are attractively priced relative to its earnings. Keurig Dr Pepper and PepsiCo are close behind, with PEG ratios of 2.80 and 2.72, respectively. Coca-Cola, however, has a PEG of 4.23, suggesting that investors might be paying a premium for its growth, which could be less appealing when compared to its peers. A lower PEG generally indicates a better investment opportunity when considering both growth and valuation, so Monster's position here is quite strong. Insider ownership can be a telling indicator of the confidence that company executives have in their business's future. Monster Beverage stands out with a staggering 27.18% insider ownership, a clear signal that those running the company have significant skin in the game. Keurig Dr Pepper also shows strong insider confidence with 22.17% insider ownership. In contrast, Coca-Cola and PepsiCo have much lower insider ownership at 0.77% and 0.34%, respectively. This stark difference suggests that the leadership at Monster and Keurig Dr Pepper might be more personally invested in the long-term success of their companies, which could be reassuring for investors. Profitability is the heart of any company's success, and return on equity, return on assets, and return on invested capital are crucial metrics for evaluating this. PepsiCo leads with an impressive ROE of 51.27%, demonstrating its efficiency in generating profit from shareholders' equity. Coca-Cola follows with an ROE of 41.06%, while Monster Beverage posts a solid 24.62%. Keurig Dr Pepper lags behind with an ROE of 8.72%, suggesting it has room for improvement in generating returns for its shareholders. When it comes to return of assets, Monster Beverage shines with 19.48%, indicating it is very efficient at using its assets to generate earnings. Coca-Cola comes next with an ROA of 10.67%, followed by PepsiCo at 9.74%. Keurig Dr Pepper again trails with a 4.19% ROA, highlighting a potential area for improvement. Looking at return of invested capital, which measures how well a company is using its capital to generate returns, Monster Beverage leads with an impressive 31.21%. PepsiCo and Coca-Cola follow with ROICs of 20.51% and 18.48%, respectively, while Keurig Dr Pepper has a ROIC of 7.96%. These numbers underscore Monster's ability to generate high returns on invested capital, making it a standout in this category. The evolution of shares outstanding can significantly impact shareholder value. An increase in shares can dilute existing ownership, while a decrease often indicates share buybacks, which can enhance value. Keurig Dr Pepper has been increasing its shares at a compound annual growth rate of 27.35%, likely to raise capital for growth initiatives. In contrast, Coca-Cola and PepsiCo have been reducing their share count slightly, with compound annual growth rates of -0.28% and -1.14%, respectively. This strategy of reducing share count often signals a focus on returning value to shareholders. Monster Beverage has seen a flat evolution in its share count, indicating stability in its capital structure. Continuing with the earnings per share or EPS, that is a critical metric that represents the portion of a company's profit allocated to each outstanding share. PepsiCo leads with an EPS of $7.92, followed by Coca-Cola at $2.79, Keurig Dr Pepper at $1.86, and Monster Beverage at $1.61. However, it's important to look at the expected growth in EPS over the next 5 years. Monster Beverage is expected to see the highest EPS growth, with a projected compound annual growth rate of 13%. PepsiCo is expected to grow its EPS by 8.04% annually, Keurig Dr Pepper by 7.04%, and Coca-Cola by 6.14%. Monster's strong expected EPS growth suggests significant future earnings potential, making it an attractive option for growth-focused investors. Looking at the historical growth of EPS over the last decade, Monster Beverage again stands out with a remarkable compound annual growth rate of 14.94%, reflecting its rapid expansion and scalability. PepsiCo follows with a compound annual growth rate of 6.15%, and Coca-Cola has a more modest 3.54% CAGR. Keurig Dr Pepper, on the other hand, experienced a decline in EPS with a -5.65% compound annual growth rate over the last decade, though it has been increasing since 2018. This turnaround for Keurig Dr Pepper might suggest a recovery phase, but it's something investors should monitor closely. Free cash flow per share is a vital indicator of a company's ability to generate cash relative to its shares. Monster Beverage and PepsiCo have shown solid FCF growth, with compound annual growth rates of 11.32% and 0.11% over the last decade, respectively. Coca-Cola has managed a 1.3% compound annual growth rate in FCF per share, while Keurig Dr Pepper saw a significant decline of -11.36% compound annual growth rate over the same period. This decline in Keurig Dr Pepper's FCF might raise concerns about its cash generation capabilities, especially when compared to its peers. For dividend-focused investors, PepsiCo offers the highest dividend yield at 3.14% with quarterly payments of $1.355 and is considered a dividend king with 51 consecutive years of dividend growth. However, we can think that as spectacular growth over 8% during the last decade it is over, due to over 100% free cash flow payout ratio. Coca-Cola follows with a yield of 2.68% and quarterly payments of $0.485, and Keurig Dr Pepper with a yield of 2.35% and payments of 22 cents. The negative compound annual growth rate for Keurig Dr Pepper might be a red flag for dividend investors. Despite the fact that Monster Beverage currently does not pay a dividend, it is to be mentioned that if we assume a 25% to 30% free cash flow payout ratio, we will be speaking about $0.1 quarterly payments and 0.85% dividend yield, and potential growth rate over 10% for the next decade. Operating and profit margins give us insights into a company's efficiency and profitability. Monster Beverage leads with an impressive operating margin of 27.39% and a profit margin of 22.84%, showcasing its highly efficient operations. Coca-Cola follows with a 22.5% operating margin and a 22.92% profit margin, reflecting its dominance in the global beverage market. Keurig Dr Pepper has an operating margin of 23.36% and a profit margin of 14.47%, while PepsiCo, despite its large scale, has lower margins, with an operating margin of 15.4% and a profit margin of 10.34%. Monster's high margins indicate strong control over costs and pricing power, making it a leader in this category. When we examine the evolution of revenue and earnings over the last 8 years, all four companies show positive trends, but the impact on their market prices has varied. Keurig Dr Pepper has shown a very positive evolution, but this has not been fully reflected in its market price, as it has underperformed the S&P 500 ETF, VOO, in total returns over the last 5 years. Coca-Cola has had a flat revenue and earnings evolution, which has been reflected in its market price, also underperforming the VOO. PepsiCo and Monster Beverage have both shown positive revenue and earnings evolution, but like Keurig Dr Pepper, this has not been fully reflected in their market prices, with both underperforming the VOO. This disparity between financial performance and market price returns could present opportunities for savvy investors. Debt ratios provide insights into a company's financial leverage. Monster Beverage and Coca-Cola are the least leveraged with debt/EBITDA ratios of 0.39 and 2.70, respectively, indicating very conservative use of debt for Monster. Their debt/free cash flow ratios are also low, at 0.53 for Monster and 4.65 for Coca-Cola, suggesting strong cash flow relative to their debt levels. PepsiCo has a slightly higher debt/EBITDA ratio of 2.73 and a debt/free cash flow ratio of 6.35, indicating more leverage, but still within manageable levels. Keurig Dr Pepper, however, has a debt/EBITDA ratio of 3.49 and a debt/free cash flow ratio of 13.85, suggesting a higher level of financial leverage. This higher debt level might be a concern for investors, especially if the company faces challenges in maintaining its cash flow. Finally, let's talk about market caps and the price returns over the last 52 weeks. Coca-Cola leads with a market cap of $312.34 billion, followed by PepsiCo at $237.46 billion, Keurig Dr Pepper at $49.65 billion, and Monster Beverage at $46.17 billion. In terms of price returns, Coca-Cola delivered the strongest performance with a 19.84% return, while Keurig Dr Pepper saw an 8.41% return. PepsiCo experienced a slight decline with a -4.53% return, and Monster Beverage had the poorest performance with a -18.95% return. These price returns provide a snapshot of how the market has reacted to each company's performance over the past year. Now, let's talk about the crystal ball moment: analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Keurig Dr Pepper has a price target of $36.86, representing a modest upside of 0.68% from its current price of $36.61. My fair value estimates tell a very similar story. Keurig Dr Pepper is close to its fair value at $36.54, suggesting it is currently fairly valued. Continuing with Coca-Cola's price target is $70.89, which actually represents a downside of 2.18% from its current price of $72.47, indicating that analysts see the stock as potentially overvalued. And for me, Coca-Cola, with a fair value of $60.17, appears overvalued. Now, PepsiCo has a price target of $182.35, with an upside of 5.48% from the current $172.88. And for me, with a fair value of $160.89, can indicate a reasonable price but slightly overvalued. Finally, Monster Beverage's price target is $54.58, representing an upside of 15.81% from its current $47.13, with a fair value for me of $50.77, also seems overvalued, but not by as much as Coca-Cola and PepsiCo. These valuations indicate that while there is some potential for growth, investors should tread carefully and consider these stocks' current pricing relative to their intrinsic values. In conclusion, each of these beverage giants has its own unique strengths and challenges. Monster Beverage stands out for its growth potential and strong profitability metrics. Coca-Cola and PepsiCo, with their established market positions and solid dividend yields, remain attractive for income-focused investors, but their current valuations suggest limited upside. Keurig Dr Pepper presents a mixed picture with a decent profitability but faces challenges with its debt levels and past EPS performance. Your investment choice will depend on what you value most in a company: growth, profitability, or stability. So, which one will you invest in? Let us know in the comments below. If you found this breakdown insightful, Don't forget to hit that like button, subscribe, and ring the bell for more in-depth financial analysis. Until next time, happy investing.